Hey folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Monday, June 15th, 2015. Let's get into the action. You're looking at the SPY, which again is the S&P 500 ETF. This is today's price action. So you can see we gapped down quite a bit today, sold off, and then bounced beautifully. Now, I knew we were going to bounce here. We took it as a trade in the intraday stock chat. We made quite a bit of money here on various plays early in the day off of this level. Now, the reasoning is very simple, and I want to explain to you why we bought it here. Also, I want to explain to you what the bigger chart is telling us when you zoom out on the overall market right now, because we're at a key level. This was a massive level right here, and if we close at some point later today or tomorrow below this level, you will see a big breakdown to the tune of probably another 6 points on the SPY, which would take us all the way down from that break point to about the 202 level. So, I mean, from here even, that would be a 7-point move. But, again, we're looking at this level. You can see the trend line right here. Now, to see this properly, you need to go to your 60-minute chart. Take a look at this, guys. Now, again, you can see we rallied off this level prior, bounced up, came back in beautifully, tagged it, and then bounced right back up. But the real thing I want to show you is this chart here. This is what we call the large time frame. This is the 60-minute, so I'm zooming out quite a bit. And you can see here a shoulder, head, and shoulder pattern. So this is what we call a head and shoulder pattern. Now, head and shoulders are of no consequence until they break the neckline. Now, the neckline is right here. You connect the armpit, if you will, to the armpit right there. So you connect this line to this line, and that gives us this break point right here. Now, notice how the SPY, the S&P 500, came into that level and bounced off of it. That's expected initially. But the question is, at what point does it break through that line? Because that's where the chart starts to have massive downside action. Okay? So that's what we're watching very closely here, guys. And again, just to go over it again, shoulder, head, and shoulder. And here's your neckline. When you break below the 208 level on a closing daily basis, I don't mean intraday, I mean at the end of the day, if you close below 208, if it happens today, tomorrow, next week, next month, that will be a major signal of downside. And again, when you calculate the target of a head and shoulders, and I know how to do that, we teach our members here, you will be looking at a 202 target price. 202 from now 209, but again, the break point's 208, so it'll be a 6-point drop from the break point. All right. Now, a lot of people out there are curious, well, how do you know it? What if the market goes back up? Well, this is very important. To negate the head and shoulders pattern 100%, you would have to take out the high of the head right here. So at some point, let's say again, remember, it hasn't triggered it yet, so we don't know if it will, and I said it was no consequence until it triggers, so you have to be aware of that. But if we start to rally higher, and we take out the high here, which is around the 214 level, then that would negate the head and shoulders 100%. And even if it comes down later on, you wouldn't look at it as a head and shoulders anymore. Basically, think of a human body, right? A very defined shoulder, a head is higher than both shoulders, and here's the shoulder. So a human body has that proportionality to it. The head is obviously higher than the shoulders, and that must continue on any sort of pattern in the charts as well. So it has to be very, very clear like that. All right, folks. So again, I want you to understand that. If you zoom out a little bit more here, if we actually go to the daily chart, let's flip over to the daily chart here and look at the daily. And you can see here, here's your daily chart. If you break that, and here it is on the daily here, here, and here, if you break the neckline right here, you're going to go to 202. Guess where 202 is? This gap fill right down here. And again, there's actually a 200 moving average right down here as well. That would be very important. So that would be your target. But again, that only comes to fruition if you break this trend line. All right, guys, bottom line is I'm bringing cutting-edge information. I want to tell you about the latest winner in the options alerts today. We had a 41% winner on Q's puts. So we bought the QQQ puts late last week. We sold them today for a 41% gain. Just another winner here at InTheMoneyStocks.com. You can join the Research Center for swing trading calls. You can join the options alerts for options calls. All right, that's options trade alerts, just like swing trades in the Research Center. And if you're a day trader, we have the intraday stock chat. Any of those are valid, folks. Feel free to enjoy them, make money at them. Take a look at our track records. They will blow any hedge fund out of the water. And by the way, you got to have over $1 million, be a accredited investor to have even access to a hedge fund. So just showing you right here, average investors who have small money, mid money, large money, we're outlanding, shooting all these hedge funds. The net gain is over 500% in the research center thus far. All right, even if you only put 10% of your account in each position, you're still up over 50%. There is no hedge fund out there this year in 2015 up 50%. Absolutely none. All right, enjoy. Come join us at InTheMoneyStocks.com.